Thank you, Mr. Chairman and members of the committee, for inviting me today. I'm going to make 5 basic remarks and then 5 recommendations. Not that there's anything in the 5s to recommend itself. It just so happens as I edited my remarks here, they came up with 5 and 5. Okay, first my 5 basic points. Point number 1, the market for mortgage credit consists of the prime or A market, the government insured market, Alt A, subprime, and brand X. And there tends to be no attention to brand X. If we observe property transfer records, there are a lot of brand X mortgages. And my suspicion is that people who are in the brand X market are not well served. Expanding the subprime market tends to get people out of the brand X market. I would like to do more research on the brand X market. My limited inquiries indicated to me it might not be safe. So that's my point number 1. There are, in fact, 4 markets. We should never forget the brand X market. Number 2, second point. There's a sound economic rationale for having some prime mortgage market of limited size, particularly concentrating on households that need to refinance out of what I call the home equity trap. You lose your spouse, you lose your health, you lose your job, you've got a lot of home equity. Guess what? Prime lenders won't touch you. You can't do a cash-out refinancing. Now, you can go for a soft second or something like that, but basically, you got to sell your house. Well, I don't think that's appropriate. Subprime market helps you out of that. It's not uncommon for new markets to overshoot. Remember the NASDAQ in the late 1990s? This is correct. Look at the NASDAQ today. In the case of subprime, the normal market overshooting was supplemented by government sort of pushing the lenders on the back and saying, go out there and serve all the underserved. As one of the people who, when the government was saying that, said, I think the people who are underserved may be underserved for a reason, and watch out. I could say I told you so, but I'm not that kind of guy. Nevertheless, I really think that in the area of bank examination, we should concentrate on safety and soundness a little more. I'm especially worried about depository institutions taking lots of risk. When depository institutions are taking lots of risk, that becomes a general risk for society, and that's what Professor Wachter means about the link between housing crisis and general financial collapse. Okay, my third point is that until recently, the subprime market looked pretty well behaved. In my testimony, I have some nice prepayment and default equations estimated for some price. They look really good, really good. I know you're not excited, but that's really good. Even things like for the 228 ARM, do you get a spike in prepayment or default at 24 months? The answer is a spike in prepayment at 24 months. Looks like the folks were using it wisely. So then what happened? Point number 4, what happened? Well, the answer is, according to the research that we've been able to do recently, is that basically the bottom dropped out of prices. I actually did the prices for, I couldn't get your district, Chairman Waxman, but this is all of L.A. Okay, for everybody in the room, your house price increase looks like the Matterhorn. By the way, not just now, it's like the Matterhorn. You've had 3 collapses, okay, since the late 1970s in house prices in L.A. Guess what happens when you fall off the cliff? A lot of subprime goes bad. So my 4th point is basically, yeah, it's house prices, and yes, it's going to happen periodically. Subprime is a little bit like providing disaster insurance. You're fine and fine and fine and fine, and then the hurricane hits. Okay. 5th point is, I mean, let's not forget that we also have a government sector here that hasn't done so well. I mean, if you look at, delinquency and default on FHA, it's not a pretty story. And we're actually paying for that publicly. And let's see, management of FHA, I guess we'll blame it on Mr. Bush. Okay. So Mr. Bush, President, excuse me, Bush, yeah, blame it on him. In addition, when you look at these numbers for FHA compared to subprime is much worse than the numbers show, because subprime mortgages, the best ones, prepay quickly. So actually, the performance of FHA compared to should be much better than subprime, and in fact, it isn't that much better. So we really got an issue with FHA, keeping things in perspective, and with management of FHA. All right, 5 recommendations, okay? What I really want to do these recommendations is prevent recurrence. The first thing is the current emphasis on borrower education and financial literacy is misplaced. You can't teach someone financial literacy if they're not mathematically literate. And the people are not mathematically literate, so they can't become financially literate. All right? Maybe some other committee can make them mathematically literate, and then we can worry about that. Two, if you want people to make good decisions, have a standardized mortgage product. I have a recommendation for the Waxman mortgage here. Be a standardized mortgage product. All lenders who provided it would have to quote prices in a certain fashion and disclose them to people, and people could comparison shop and keep themselves from being taken to the cleaners. How hard is this? By the way, FHA could pick up the Waxman mortgage as something they would do. Third point is let's examine banks for safety and soundness and not for capital allocation. Fourth point is actually all our mortgage products now are not what we economists recommend. We actually need some mortgage products, and down the line, I'd hope people would think about that and let some economists actually talk about what a really neat mortgage would be. And the fifth point is we ought to give more attention to the efforts of lenders at loan modification and forbearance. I'm really impressed with the significant numbers of loans where we have modification and forbearance, but I'm also impressed with the survey data that indicates lots of people who are in financial trouble don't contact their lender, and they could get in on these programs. Okay, so I made 5 points basically about the current situation, and then I had 5 recommendations. That's certainly more than any individual should be entitled to. Thank you.